Welcome back. In this video, I'm debunking the Augusta Strategy as a tax strategy for saving taxes for your business. And I'll be going through the tax instructions, regulations, publications, tax code to show you exactly why this is not a legitimate strategy so that you actually understand the logic behind it so that you don't fall for this in other places. And I'll also be talking about this guy, Century Law Wealth and Tax. And he's been advertising on my channel, and the Augusta Strategy is one of the strategies that he nonchalantly refers to in the training that he is advertising on my channel. If you sign up, you watch the training. This is one of his strategies. And so in this video, I'm going to explain, how to keep an eye out and how to know, when it's worth investing in a tax company that appears to have a strategy for you and when it's not, these types of red flags, as well as what you can do instead to focus on making more money in your business. So let's jump in with debunking this Augusta Strategy for business tax saving. If you're new here, my name's Amanda. You're watching The Business Finance Coach, where I simplify business to help you succeed, because I truly believe that the world needs what you have to offer, and you should feel supported by our civilized society and not held back or overwhelmed by things like taxes and accounting. I have free templates and trainings as well as other programs and spreadsheets, and you can check out more in the description below this video. So let's jump in here and talk about first, what is this Augusta Strategy? We're using the word strategy loosely. So when someone owns real estate, your home, a rental property, either way, you own real estate and you rent it out. How it's taxed is based on how much you rent it out. And the first category is if a property is rented for less than 15 days in total. So 14 days or less. If it's rented for 14 days or less, you don't have to report that activity for taxes. If we back up, gross income for taxes is that people are taxed on all their income unless there's a specific law that allows them to exclude that income from taxes. So the general rule we can see here, tax topic 415, for renting residential and vacation property less than 14 days is this minimal use clause, which means that you don't have to report any of the rental income and don't deduct any of the expenses as rental expenses. Now, why is this rule here? It's a de minimis rule. It means that it's most likely not worth it for the IRS to be processing returns with minimal use. Honestly, most of the returns would probably have a net zero impact, so it wouldn't even be impacting their tax return. And so it's just an extra step. And so for cost benefit, we're leaving it out. Now, once you hit 15 days, you rent a property for 15 days, you have to report it. And there's multiple rules for how that's reported, and I'm going over those in a separate video. So the Augusta Strategy comes in because your business pays you as the homeowner, and you, the homeowner or renter, doesn't report that as income, but the business gets to deduct it. Now, if we check out my buddy Century Law Wealth and Tax, who's been advertising on my channel, if you've signed up for his training, you'll notice that his second bullet here, have all legitimate deductions been considered, including obscure incentives hidden in the tax code like the Augusta Strategy? First of all, the Augusta Strategy is not obscure. It's not an incentive. It's not trying to incentivize any behavior, and it's not hidden in the tax code. So considering what a reach the Augusta Strategy is, I think that says a lot about this, but we'll come back to Century Law, Wealth, and Tax. So does this sound pretty good so far? You're like, Amanda, what's wrong with this? What could possibly be wrong? Well, the main problem is that this tastes and smells like fraud, and we're related parties. So there are specific rules that prevent us from, first of all, deducting something that's not a true business expense, right? Things have to be a true business expense. And the IRS uses all facts and circumstances, which is we look at the reality of the situation and ask what's happening here. So there's that issue. But the bigger, clearer issue, which I'll show you in the publications in a moment, is that this is a related party where you're paying a business expense and the other party isn't reporting that for income and you're deducting it. And that's specifically not allowed for this exact reason, because this is something, of course, that has been, a logical strategy to evade taxes for a long time. In other words, to really commit fraud and make things look as though you have an expense when you don't really. One of the things that he talked about in his video was that you could save $6,000. And I thought this was really bizarre, because he's saying $6,000 with the Augusta strategy. Like, first of all, how much is the going rate of a house your size? Because I've seen other videos where people were talking about using like hotels and meeting rooms for what your place would rent for, and that's totally not how you do comps. But the real reason here is what I just covered. And so let's take a look at where you can read some of what I just explained. So first we have publication 527, residential rental property. And in here is where they first mention, this concern with related parties. But we know that as the owner, we're not going to report the rental property. The real problem is, can we deduct the business expense on the business side? Well, here we have publication 535. So this is where we go into business expenses. Under Can I Deduct, this is the first chapter, they talk about, to be deductible, a business expense must be both ordinary and necessary. An ordinary expense is one that is common and accepted in your industry. A necessary expense is one that is helpful and appropriate for your trade or business. Now, an expense does not have to be indispensable to be considered necessary. You can have lavish expenses, if that fits in with your business. So you can see here under your rights through the Taxpayer Advocacy Service and talking about the different rights of a taxpayer, the right to a fair and just tax system. And so one of the core considerations of our tax system is facts and circumstances. The tax system considers facts and circumstances of a situation, and all facts and circumstances in this type of situation where you're trying to pluck a tax rule over here to save a business taxes. You're not taking the accounting records and applying the taxes accordingly. You're trying to dig through the tax system and pull out ways to manipulate, the business's return and take extra deductions. Now, the most important thing that I've said about how this is point blank, not an actual strategy, is the fact that the owner is a related party to the homeowner. So you can see here, a day of personal use of a dwelling unit is any day that is used by you or any other person who has an interest in it. So first of all, if you have a sole proprietor business, a self-employed business, a single member LLC business, that's out of the question, right? Because that is you. But don't start thinking you need to form another business, because all of your business expenses are the same under every type of business. Every business gets to deduct the same expenses. What we need to look at is this publication 538, Accounting Periods and Methods. If we head down to the related persons section here, what this says is that business expenses and interest owed to a related party. So if I'm the owner of a business and I'm the owner of a property, we are related parties. We're the same owner, right? But this would apply to a sister or a wife or a cousin as well. If they use the cash method of accounting, which all small people do, and it wouldn't really make this not apply regardless. Business expenses and interest owed to a related person are not deductible until you make the payment, and the corresponding amount is included in the related person's gross income. They are specifically saying we don't get to use related parties to not pay taxes, to avoid paying taxes. It's really simple. So I hope this has answered all of your questions about the Augusta strategy. You have none remaining. There are other things I could go into, like comping. There's so many things wrong with everything online about the Augusta strategy. but I've covered and shut down the main argument, I think, good enough here. So I want to stop there, and I want to just remind you of a few things. Number one, this would be a red flag for me. I wouldn't be interested in hiring him or this Century Law Wealth and Tax, especially because all the information they gave you on this webinar was very vague. And so it's important to realize, you can see at the bottom of this screenshot, book a free strategy session. So they're trying to sell their services, right? And they're trying to embellish the types of things that they can do for you. And so if that's the type of professional that you want to work with, then great. But if your business isn't to the point, where you don't have a lot going on, you definitely don't need to pay for this type of service. You're not missing out on anything. When it comes to taxes, the best way to maximize deductions is to track your accounting records as you earn and spend. And I have my Master Your Accounting and Tax course that walks you through using spreadsheet templates, my spreadsheet templates, to have complete and accurate accounting records and to actually maintain them as you earn and spend, because that's where you can get the most write-offs. We forget, oh, I spent something on my personal card. If you're not keeping track, it can be really hard to estimate at the end. People often estimate lower because it looks like such a big number. Also, there are ways that we can write off our house. And I even have my home office deduction spreadsheet template for taking a home office deduction for business use of your home. This is going to be the biggest way to get your deductions. You don't need to get distracted by people that are trying to, use the tax system and legal system to make you feel like you're missing out on things. Of course, if you haven't subscribed to my channel, you might want to do that, and I'll keep you in the know. Post any questions below about any other strategies you've heard of, and I will definitely do videos on those as well. But lastly, I want to share with you the main way, nothing to do with the accounting and taxes, because accounting and taxes are just facilitation of what you're doing in your business. But when it comes to your business and making the most money, so that you don't need to even remotely be looking to the accounting and taxes to save you money or make you money, because you have all the money you need to meet your goals from your business. The biggest thing I find that people aren't focused on in their business is solving a problem for their customers and clients. And it sounds so obvious, right? But whenever someone isn't making the money they want, or they're not making money at all, it's because they're not focused on this. They're distracted by all sorts of things and all sorts of stuff, and they're not focused on either making sales, signing contracts, or getting pre-sales, which would be somewhere in between those. There's really no reason for a business to focus on anything else. And the way you focus on getting those things is by focusing on customer or client problems, not our business ideas. We need to focus on the client customer. Of course, we want to have ideas, but we really want to stay focused on the problem. Plenty of people have problems. The world and the way we live creates trash and impact on the environment, and people are ready to stop. But we live in a paradigm that's been built up on creating massive waste. I mean, that one problem alone, if you focused on that in your industry, you will have a booming business. If you look to the areas that have problems, you will create a super successful business. And let me tell you why. It's because we have a free market society. And I hate when politicians pull in free market into whatever their agenda is that's going on, because it's total BS. Prices, it's an extension. The point of free market is that you and I are able to make solutions that change the world and affect how people live and solve people's problems. And so naturally, in a free market, you will be rewarded hugely if you do stuff to serve others. You don't even have to worry about the money at all, which is an awesome concept. And really, this applies in other societies as well, but certainly in ours with free market, we get to use business as a tool to serve others. So if you literally, you can focus on your industry. If you're already in an industry and you have skills in that industry, that's certainly a great place where you could provide value, doing something differently than's been done before. That's what I've done with my Master Your Accounting and Tax course. I looked at all these people who are struggling, not being served by the market. And I figured out how to create a spreadsheet template that actually replaces accounting software. And that template, my clients who are struggling with the problem, I was committed to helping them. Client helped me create that spreadsheet. They built on what I had created, and then I built on what they created. And that spreadsheet, that solution has evolved over time. So it's not easy to make something new. It's not easy to solve problems and change the world, but that's where the money is. Okay, so that's all for my rant. That's all for this video. I hope you found this helpful. I'd love to hear from you in the comments below. What is your business? Have you heard of any other tax strategies that you've been focusing on? Or what problems are you trying to solve? And if you're new here, do consider subscribing or check out some of these other videos that you might like. And otherwise, I'll see you next time. Bye.